Boursier, thank you. Thank you for the opportunity for me to let you know and show you who we are, who ADF is, ADF Group, what we do, who we are, where we're coming from, and where we're heading. I think that my job will probably be easier for you to understand and know why you should invest in ADF than Ryan had in trying to explain why the Canucks should be compared to Montreal, but that was his own challenge. So ADF has been in business. We're actually celebrating our 70th anniversary this year, so we are a steel manufacturer. We are known for our complex work. We do complex work with complex fabrication, with complex engineering. This is Giacomo Peschini, the founder of ADF. We started as a blacksmith shop in Sainte-Rose, Laval, built the plant there. Mr. Peschini had 3 kids, Jean, Pierre, and Maryse, who are still, as of today, senior management. The second generation also had each 3 kids. So the third generation, 8 of the 9 third generation are working for ADF. So we are a publicly traded company, but really a family company. So I always say the body of a public company, but the heart of a family, of a family organization. So this is what we'll be quickly going through. What I'd really like to be able to do is not, Ryan has touched on what we've done over the past few years and some numbers, but I'd like for you to understand who we are and what we do. So slowly but surely. Okay, okay. So what we work on, we're, as I said, really well known on the standard complex steel structure. The steel structure, so we've got an example of things we do, the World Trade Center, not that much there, but on that one. So this is one of the icon project we did. So not only did we did a part of the actual high-rise, but we did all of the antenna on top of the World Trade Center. We not only do fabrication, but we also do engineering, and we also self-install some of the project we do. We operate in Canada and the US. Historically, the US has always been the main market of ADF Group. The US market, from a steel manufacturing perspective, is really the main market. This is where the bigger projects are, and this is really where ADF differentiates itself from the competition. We're not that much into fabrication of standard work, so the square building with H-beams connecting at right angle, we obviously can do, but this is not where we want to be. We rather be working on the more complex work where there's complex engineering, complex connection, heavy parts, and fast-track projects. These are some examples of work we've done in the past. So recently, we've worked in Syracuse for the Carrier Dome. So we did, you see the parts there. So we did a number of parts for their stadium. It's for the college team. We've also worked on the General Motor Michigan assembly plant. Some work also on the Champlain Bridge. I was talking earlier about that, and obviously this is some of the challenges that we have. It is changing recently, especially with the new Canadian government and the Buy Canadian Act. But for the example of the Champlain Bridge is an example of a really big project in our own backyard. but where the project, the fabrication was given to a Spanish fabricator. At the end of the day, some work was subcontracted to Canadian and Quebec fabricator, including Can-Am and ourselves. So we were able to do some of the work, but these are some of the challenges we had to go through. Not only the Buy American Act in the US, but not having the similar Buy Canadian Act, if you want. So we were even struggling to get pretty significant project in our own backyard where, if not for us, for the likes of Can-Am and Supreme, definitely have the know-how in Quebec, but we're not able to land that specific project, even though it was financed by public funds. Another projects we did, which shows the type of work we do, which is definitely not typical, projects in Manhattan for the support pillar for the big wheel. So the 4 supporting pillars were done by us. Oops, sorry. We do a lot of airport works. We worked in Miami. We did the new Salt Lake City terminals a couple of years ago. And over the past few years, we've done a lot of work at LAX for the People Mover project. We are based, our corporate office is in Terrebonne, where our main fabrication site is. In Terrebonne, we have a close to 600,000 square feet of covered space. We have also a fabrication plant in Great Falls, Montana, where we are able to work on Buy American projects, having the US fabrication capacity. This is the Terrebonne plant, so it's along the Highway 640. One of the things we did so as I mentioned, 630,000 square feet of covered space. We do have at that site a 42,000 square feet industrial coating facility also. Production capacity of 125,000 tons, 300 employees. What you see on the lower left corner is an investment we did 3 years ago, which is the fabrication robot we added. We invested $30 million some years ago, 4 years ago, to add that. So it obviously was a game changer for us. The fabrication line is a double line. When we set it up 3 years ago, it was, from a capacity standpoint, the biggest fabrication robot, not only in North America, but in the world. Since then, there's been a couple of them that have been set up in Europe, but we still have, our robot is still the biggest from a capacity standpoint in North America. The robot itself obviously works on more standard work, so it will do welds and cut beams and do some of the setup. It takes over a year. The robot will do the work, which is normally done by 100 employees, approximately 100 employees. So obviously, we have specialized employees. The robot will work on the more standard work where there's not a whole lot of added value to the work. That frees up our resources, our specialized resources, to work on the more complex work. So when you look at our results and look at our margin, you definitely see the difference in our efficiency and our margin since we added the robot. And it also helped, obviously, from a ramp-up standpoint, because at the same time, our volume and our backlog increased, which typically would have meant that we would have needed to hire a whole lot of employees, welders, fitters, positions that are not easy to help, but obviously having the robot enabled us not to have to hire as many employees, with the challenge that comes along with that, and still be able to capture the growth and provide and do all the revenues that were required. Sorry. back. This is our Great Falls, Montana plant. So that plant is sitting on 4.5 million square feet of land. The main plant, which is on the left, is 100,000 square feet, so much smaller than the one in Terrebonne. The plant on the right is a dual plant, so 50,000 square feet. Half of it is for fabrication, half of it is a paint shop. Helps us in delivering or fabricating projects out west. So typically, and this is not cast in stone, but typically projects anywhere east of the Great Lakes, be it in Canada or in the US, would be fabricated from our Terrebonne shop, whereas projects west of the Great Lakes would be fabricated from Great Falls. So with the two plants, and I'll talk about Groupe ADF in a couple of minutes, but with the two plants, obviously, we're really well positioned to serve any projects anywhere in Canada and the US. This is our latest addition, Groupe ADF, situated in Métabetchouan, so really in the Lac Saint-Jean region. Groupe ADF, we purchased Groupe ADF, finalized the transaction last September. Groupe ADF is a steel manufacturer also, but really specialized on the hydroelectric work. So they do huge parts for hydro dams and also for the heavy overhead cranes industry. They really are specialized in the oversized steel manufacturing. So this is something that typically ADF could have done in our plant, but we would have needed to acquire the required equipment. LAR has a long-standing history. They've been in business for more than 80 years. They ran into an issue with one project that put their balance sheet under pressure. That's when they started looking for investors. We started talking to them early in 2025. And once everything was said and done, decided to buy the company. We were able to do that through a reverse vesting order, so still bought the shares, kept the name. More importantly, we were able to get all the certification that they had with Hydro-Québec, with BC Hydro, with OPG in Ontario, to be able to keep their projects. And we were also able to get rid of not only the debt, but also the assets that we really didn't need for the rest of the operation. So it was a pretty good transaction. The nice thing about Groupe ADF is that they're in a market that's in a huge, which has a huge expansion forecast. You probably all heard that all the investment that are required in the hydro market. As recently as 2 or 3 weeks ago, Premier Carney again mentioned is the intention of growing that market. Even before those announcements, Hydro-Québec had announced a $35 billion investment plan to refurbish existing dams and also build new one to expand capacity. Same is happening in Ontario, same is happening in BC, and same also in the Maritime. So it's really a market that's in full growth, and the acquisition couldn't come at a better time. We are, and we've already announced this last October, we will be investing to double the capacity and provide them with more modern equipment. We're actually starting the construction of the expansion in Métabetchouan in a couple of weeks. The goal is to have the plant up and running around April, May 2027, which will be really in time because at the same time, and as we also mentioned in last October, we had really aggressive plan to double their backlog. Well, I can say as of today, including the announcement we did in April, we've basically more than doubled their backlog already, which was standing at 100 million. We've now exceeded the 200 million, and we'll probably, in the next couple of months, we'll probably be able to confirm that we've tripled their backlog. So really the growth for that market is really promising. This is a brief history of what we've done over the years. So as I said, 70-year created in 1956. We've gone public in 1999. 2014, we invested, that was a major investment. We invested $40 million US to build the greenfield plant in Great Falls. So really started from scratch. That, as I said, enabled us to be able to tackle any projects that would be under the Buy American Act, but also provides us a really optimal footprint in the US. 2022, as I also mentioned, the investment in the automation in Terrebonne, and lastly in 2025, the investment in Groupe ADF. ADF has been known through the years to invest in his equipment to make sure that we always have state-of-the-art equipment. ADF Group is one of the sole remaining steel manufacturer in North America that's still publicly traded. All our competition, including the Canams in Quebec, Schaff in the US, bankers, and all of them, through the years have been acquired, a lot of them through private equities that definitely have much deeper pocket than ADF. So if we only compete in the market by trying to buy contracts, we won't win. We definitely don't have, we're in a really good financial position, but we definitely don't have the same financial backings that some of those companies being backed by the private equities have. So we can't get in bid wars just to win the project. So we need to win projects on merit. And ADF is known in the US and in Canada for their work on the complex work. Our portfolio, I've just shown you a few examples, but if you go on our website, you'll see all the work we've done, the complex work. This is known in North America. So when we bid on projects, yes, pricing will always be important, so we need to be competitive. But at the end of the day, what the client wants, especially nowadays, they want to make sure that they get their project on time, meeting the schedule, meeting the budget, but also with quality, and that we can do. And in order to do that, we do need to invest in the equipment, and we've done a good job of doing that. Not only the equipment, but also making sure that we're in the right market. So we might not be as flashy as the others, and we do have a pretty conservative approach over contract signing. We are really risk adverse, and we're really mindful of making sure that when we do sign contracts, that we're comfortable with all the contractual clauses and all the requirements from the projects. But our backlog is a solid backlog. It's not just a backlog for the sake of having a high backlog. So it's a strong backlog with good margins, but even more important, without significant risk in it. There's obviously in fabrication, there's always complexity, but I think through the years, we've done a good job of executing, and that's key for us. That's just a quick, and Ryan showed that, but that's really a quick overview of the backlog growth over the past years. FY26, we are a January 31st year end, so that was FY26 is our January 31st backlog. So at 561 million was a record backlog for ADF. That backlog included 138 million of backlog coming from Groupe ADF. We will be publishing our Q1 results, our April 30th results in 2 weeks. I can tell you that the 561 million backlog record will be beaten at the end of Q2. Won't tell you the number right away. You'll have to stay tuned in 2 weeks, but it will be beaten. Revenues and net income. Obviously last year, FY25 was really an exceptional year for a number of reasons. A number of projects lining up on an operational side with really significant margins, a lot of volume going through the robots, or really a margin mix that's really good, even actually 30% and more gross margin, which is not typical for our type of industry. So obviously we take it when it comes, but that wasn't sustainable. So we knew in FY26 that the margins would go down. What we didn't exactly know was that everything that surrounded the tariff discussion. So obviously, at the beginning of FY26, so early in 2025, all the discussion about tariffs came that really put a dent in the momentum we had in contract signing. You can imagine that trying to negotiate with US clients for fabrication being done at our Terrebonne plant with tariffs going up and down and being in, being out, conditions changing almost on a daily basis. But even worse, without any real good forecast, was not great for contract signing. In spite of that, we still were able to deliver pretty good results. If somebody would have told me at the beginning of 25 that we would have ended up with the results we did, higher than 20% gross margin, revenues of almost 300 million, I would have bought that, and that's what we've been able to do. The more important change, so in short, you can see this is what I've shown. So through the years, what we've been able to achieve. I think that with the backlog growth that we've just shown, to have the $1 billion backlog in the coming years is something that at one point was sort of pie in the sky, but it's definitely something that's not out of our reach. So we definitely just need to stay focused. What the Groupe ADF acquisition did, besides adding a new market to ADF, and that's why the timing of the acquisition was so good, is that, as I mentioned before, historically, as you can see, especially in the first two bars, is that historically ADF revenues and backlog was coming mostly from US projects. The US project is the bigger market. It's where the more complex projects are. So historically, anywhere between 80 to 85% of ADF's backlog was coming from US project. Starting in Q2 last July, before the acquisition, we announced a long-term contract on the hydroelectric side. So we're basically fabricating hydro pylons. So that's a 5-year contract in Quebec, so in Canada. So even in Q2, you could see that the Canadian content increased in our overall backlog. And in Q3, so October 31st, after the acquisition, including Groupe ADF, and also as at January 31st, our backlog mix changed from what used to be 80, 85, 90% US content to 57% of our backlog being Canadian content. And that percentage will further increase with the backlog we'll be publishing or releasing in 2 weeks. That's a huge change for us. So obviously, in the context that we are in now, and at least for the next little while, I think we will still need to work with the uncertainty. We're already seeing US clients come back to us saying that they are starting to consider paying the tariffs because the capacity in the US, especially for the bigger projects, the more complex project, is starting to fill. There's not that many players in the US that can do what we can do. So as recently as a couple of weeks ago, we have clients calling us and saying that they're willing to discuss the tariff, whereas maybe 3 months, 6 months ago, nobody wanted to have any discussion. So it's looking good. This said, I think that at least for the next 2 years, we're stuck in a situation we're at. As of today, the US market is still really good. It's really a shame that we have the situation we're in, But besides and in spite of that, we're still growing the backlog, and I think that, not I think, but we do have a mix that enables us to take a lot of the risks away from that situation. So we're definitely not pulling out of the US market. We do have our Great Falls plan where signing US projects being fabricated in Montana is not an issue. That plan obviously is smaller, but we do have the possibility of expanding that plan. And that might be something, and there's nothing in the works, but that's definitely something that we can do if we see that the situation persists. For the time being, we'll concentrate on law. We keep signing. We are still able to sign projects, US projects, even being fabricated in Terrebonne. But we're really happy with the backlog growth. It definitely gives us visibility going forward, and it takes a lot of risks away from the tariff situation as it stands now. Quickly, the hydroelectric sector, that's what I was saying, law acquisition. So there's a lot of growth in Quebec. You can see the announcement from Hydro. Same in Ontario, another 2.5 billion, the Atlantic provinces. Same in British Columbia, also huge investment plan. So the hydroelectric market is really booming, and we're seeing it. As I said, we've already been really successful in securing new contracts for Groupe ADF. These are the clients that Groupe ADF normally typically works with. CapEx investment, I mentioned that we're starting construction. So this year we'll be investing 35 million. Well, in Métabetchouan, we'll be investing 35 million actually over the next 2 years to expand. So basically adding a 77,000 square feet extension, so doubling the capacity for that facility. So that's in a nutshell, that's it. So thank you for having me.